Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, October 22, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? By the end of the day, it's another day where the market basically went sideways, eating some time off the clock, ran a test of yesterday's low, letting the 20-period moving average or home base creep up to price as price goes sideways. That's what's going on. Sideways is a corrective move. Time is more important than price. If she's eating time off the clock, that is considered a corrective move. I want to point something out that I find interesting. Remember, we were talking about home base a couple of days ago. She's getting a little bit extended from home base. When you look at the weekly chart, she's a little bit extended from home base. Certainly can go higher, but getting into the area, when you look at the history on the chart, it's a little bit extended from home base. Okay, fair enough. What do we have on a 4-hour chart? She came into home base and ricocheted off home base. This was the first 240-minute candle today on the gap lower opening. The 3-hour chart, gap below the 20-period moving average, got back above it and closed the day above it. Interesting information. 2-hour chart, gap below the 20-period moving average, fought back to it, got above it, closed above it. So these moving averages are important on all time frames. The larger the time frame, the more dominant the moving average is. Write that down, put it on a sticky note. Has there been any material change in the SPY chart today? No, she's above all the moving averages. The trend is your friend. At the end of the day, the Spider was down 31 cents or 5 bips, 5 basis points. That's nothing. It's a rounding error. It was flat on the day. 0.5%. However that verbally comes out. Here was a trade we had some participation with in the live room today. This was not from Stocks on the Move. This came up after the open. That's what happens in the live room. Whatever's moving, whatever we can find a support or resistance area is, as we say in the trading parlance, in play. Nucor Corp was in play, NUE, 143.60. She came into it, bounced around for a while, went back in the other direction. Nice trade for those that took it in Nucor. Live room trade situation. Here's another live room and inside the number trade. This was from what? This was from the table that's now provided to members of Inside the Numbers in the live room, IWM. 220.35 was the number. 220.35 was the number. And that was the bounce opportunity. We had some traders in the live room that participated, made money rather quickly in IWM. That table, what I urge you to do is study the numbers. Go back to the chart and double check the work. Not all these numbers will hit each and every day. These are numbers where we're expecting A, they're a target because they're magnetic, and B, many of them will be good for a reaction in the other direction. These aren't just necessarily intraday scalp type numbers. These can be more important numbers. Let's get back to the S&P. Right of the vertical is today's activity. Here's a 5-minute chart of the SPY. This is the intraday commentary section of Inside the Numbers. It starts with its turnaround Tuesday. We woke up to the S&P down 20 or so points, actually down a little more throughout the morning session. So we're waking up to a red screen where S&P futures are down around 30 handles. So what we're saying is, remember the volatility conversation from last night. Remember the discussion in last night's video. We had the divergence where volatility had higher lows. It was in an uptrend, and we had the stock market at all-time highs, basically within pennies. So those two things don't jive. Remember that conversation. So I issued that of funny how that works. So right around 9 o'clock, we start looking for, hey, what's the setup? Where's the pivot? What are the resistance and support numbers? They're posted on the board, remember, in the table early on. Now we're going to put some words to the S&P commentary. This is part of Inside the Numbers. 581.65 is the pivot. We'll start there. Above, she's bullish. Below, she's not. 581.65. The door was open for a push lower if she's below the pivot. We didn't get my desired price lower. That was from Inside the Number live room today. I was looking for a spike below 580 to pick up a long trade. However, what we did talk about was if they establish price back above the pivot, they're going to give you back at least 583, give or take. They did that. Plus, you can see once they got back above the pivot, all of a sudden they came back for a retest here, and then they came back for a retest here. They established price back above the pivot, tested it a couple of times, took off to the upside in the afternoon. The pivot is important. You must know the pivot when trading in the S&P or anything else during the trading day. The pivot is essential, as they say in the trading parlance. Staying below the pivot keeps the door open first to a run down for a test of 580.60. And there was your 580.60. Just a spike of that turned out to be low of day. So they did spike the low and rip it back up in the other direction. The low we're talking about is the low from yesterday afternoon or yesterday morning at 11:30. I was looking for a little bit lower to pick up the SPY on a rip it back up in the other direction trade, but 580.60 was posted on the board before the opening bell. Did you have these numbers if you're not an Inside the Number member? Did you have these numbers early on today? Maybe some did, maybe some didn't. Above the pivot opens the door for a run up to 582.50 at least. That changed to 583 later. Here's your 583 overhead resistance. We were willing to short the tape if they got up there in the morning session quickly, sooner than later, but that didn't happen. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. We highlighted several important things that did happen today that were cited in the notes and that were found in the table of numbers. And the last component to Inside the Numbers is we'll take a look at stocks on the move. I showed traders today in the live room how the earnings will begin to come fast and furious. We have them by the hundreds for the next several days, so we should get an endless supply of opportunity from a stocks on the move perspective each and every morning for a while now during earnings season. Verizon hit its entry objective. KMB jumped its first target, didn't get to the second one. Logi didn't get to its entry objective. Neither did SHW, but GPC gapped below even the third number, so that one was off the board. So we really only had technically one opportunity hit its number today in the correct manner. It was Verizon, so we'll take a look at that chart. There was the buy zone for Verizon, 41.32 down to 40.61, which was the second number. They came up short of the second, spiked through the first, ripped it back up in the other direction, and gave you the base hit, making a high of 42.32, exactly $1 from entry on a $41 stock is pretty good stuff. Well over 2% in a matter of minutes. That is a scalp with potential. Here's the daily chart over in Camp IWM. This blue line was where they bounced off early today. Happened to coincide with a 20-period moving average. It's a funny how that works. There was a touch of relative weakness against the S&P 500 today in Camp IWM, or the small cap index, the Russell 2000. It was down 84 cents, or almost 0.4% against a flat SPY. So we will take heed in that. We will note that it's a puzzle piece. It's on the table. However, it does get canceled out when we take a look at the folks down at the transportation department who also hit their 20-period moving average, ricocheting off of it, staying above. Both markets stayed above. Favorite leading indicators stayed above their respective 20-period moving averages are home base. So they are, in fact, above all the moving averages, and the trend remains your friend when that is the case. So we take that as the dominant thing. The trend is the dominant thing. The trend is a dominatrix. How about the Q people? So they were up 54 cents today, 1/10 of 1%. No big deal either way. No material change on the chart. They also are above all the moving averages, and therefore the trend is your friend. No material change happened. All they're doing is eating time off the clock, running sideways, doing what? Building energy for a move higher to do what? Challenge the former high that they are, in fact, eating time off the clock underneath. They are eating time off the clock in order to challenge it to do what? Get to and through the former high. That's what they're doing at present. That will stay real until they start getting below and staying below, closing daily below the what? 20-period moving average. Write this down, put it on a sticky note. That's the facts for the Q people. What about the XLF? What was the XLF at the end of the day today? Down 9 cents or 0.2 of 1%. We're not going to make a federal case out of that. All they're doing is pulling back toward the 20-period moving average, also giving the 20-period moving average a chance to creep up to price. Nothing materially changed on this chart. They are comfortably above all the moving averages on all necessary time frames. There's nothing to do in the XLF unless ride it if you're long. That's it, period, full stop. What about the smash mouth people? Well, they're above all the moving averages, so we'll heed that and say that's the dominant thing, but we're not going to lose sight of the $14 down day reversal candle on volume. And yes, they can be running sideways in a pattern inside of a pattern where you have a move off the low and they are making a bull flaggish type of situation, building energy to make another move higher to do what? Run a test of said breakdown candle high. That was the high of the big down day. So you can look at this in a variety of different ways. This is what they currently are doing at present, but they can also jump right below these moving averages tomorrow, and from a symmetrical standpoint, find themselves below the blue moving average, which happens to be the 50-period moving average, and this symmetrical pattern will likely play out down around 234, 233. That's both sides of the coin. We talk about both sides of the coin. It's not out of both sides of our mouth. The reason is because we are the umpire calling balls and strikes. You want to be the umpire selected for the World Series. You want to be on that crew. Why? Because those are the best in the business. Not the Angel Hernandezes of the world. I know he's gone now, but these are the best in the business. That's who's on the crew for the World Series. Why not have the best in the business umpire crew for the two best in the business teams to find out who's going to be the World Series champs? That's the way it works. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.